LaRasha here. All right, let's get right to it. We just saw a violent reversal in the market. That liquidity vacuum that was absolutely crushing assets, it's been filled. Aggressive institutional money just flooded back into the Asian supply chain. It looks like the forced selling is over. So let's break down exactly what happened, and more importantly, what it means for the US Open.
And this is the core question, isn't it? Yesterday was a total cascade of forced mechanical selling, and today, one of the most powerful rebounds we've seen in a long time. That disconnect, well, it's extreme, and it holds the single most important signal for tonight's session in the US.
And here's the answer, right up front. The signal is crystal clear. Just look at this heat map from the Korean close. It is a sea of green. This is telling us the forced liquidation is done. But what's really telling is the intensity in the tech sector. See those massive green blocks for Samsung and SK Hynix? This wasn't some slow, cautious buying. This was an explosive, all-in re-entry of capital.
Let's put some hard numbers on that explosion. The KOSP index itself ripped higher by an incredible 6.84%, but the real alpha, the real story, was in those key supply chain nodes. Samsung activated a massive buy signal, jumping 11.37%, and its strategic partner SK Hynix was right there with it, up 9.28%. You see, this isn't just a simple recovery, it's a powerful statement.
So how in the world did we get this kind of market whiplash? Well, to really understand the opportunity here, you have to understand the weapon that caused all the damage in the first place. We're going to deconstruct the mechanism known as the VAR shock.
The main culprit here are quantitative funds running a risk parity strategy. Think of it like cruise control in your car. When the road is flat, that's a call market, it presses the gas, using leverage to keep returns steady. But the second it hits a steep hill, a spike in volatility, it slams on the brakes, force selling assets to keep the risk level constant. These aren't people making calls, they're algorithms with one job.
And when volatility spikes hard enough, they trigger a VAR shock. Value at risk is basically their pain threshold. The moment a market event pushes volatility past that preset limit, the algorithm's only command is to sell. Sell everything. It doesn't care if a company just reported record earnings. It doesn't care about good news. Its only job is to cut risk and to do it immediately. That was the mechanical selling we saw yesterday. And this slide just nails the difference. Look, if this was fundamental selling, driven by actual bad news, we'd see a slow bleed and an even slower recovery. But this was algorithmic. A violent, sharp crash triggered by volatility, followed by an equally violent V-shaped recovery. This is basically proof that the crash was a technical event, not a fundamental crisis. And because the selling was so mechanical and not based on fundamentals, the second that selling pressure turned off, the market didn't just recover, it snapped back like a coiled spring. This is a classic case of mean reversion. The value was pushed down artificially, and now it's just violently snapping back to where it should be. Okay, but a technical rebound needs a fundamental reason for you to really trust it. So what was the catalyst? What was the fuel that ignited today's absolute buying frenzy? Let's dig into that, because the real story is hidden deep in the supply chain. Here it is. This is the hidden signal. While all those algorithms were blindly selling everything, news broke confirming that Samsung is now a key strategic partner for Nvidia's next-generation Rubin AI platform. They're going to be supplying the critical HBM4 memory. And for those of you who don't know, HBM4 is the next-level high-bandwidth memory that's absolutely essential to power the most advanced AI models. This tells us the AI hardware spending cycle isn't slowing down. It's actually accelerating. And this is what we're talking about. This isn't just a ticker symbol on a screen. This right here is the physical backbone of the entire AI revolution. The demand for these high-bandwidth memory chips from Samsung and SK Hynix is probably the single most important leading indicator for the health of the entire global semiconductor ecosystem. Okay, so we've got a powerful signal from the Asian close. Now we have to build the bridge. How do we translate this raw data from SEOUL into a solid, actionable plan for the Nasdaq Open? This image really visualizes that capital flow. The smart money that poured back into Samsung and SK Hynix today, that's a proxy for global risk appetite in the tech sector. And that sentiment, it doesn't just stay in Asia. It flows directly into the US markets as traders get positioned for the open. So what we saw in Korea today is very likely a preview of what's coming to the US. So here's the crucial takeaway. The Korean market is often the canary in the coal mine for global liquidity. It's first in, first out. The fact that it's stabilized so violently after that VAR shock, that's a huge signal to US traders that the automated algorithmic selling pressure has probably burned itself out on a global scale.
All right, now for the most important part, the execution plan. We've got the thesis, now we need the tactical levels to trade against for the US Open.
This is the only number that matters tonight. 25,984 in the NASDAQ 100 futures. This is our pivot, our line in the sand. The entire bullish thesis that we've built from the Asian close is anchored right here. To this level,
the action plan from here is simple and binary. As long as the market holds above 25,984, we maintain a long bias. Simple as that. It means the signal from Asia is still active. But, and this is important, if we see a decisive break below 25,500, the thesis is wrong. It's invalid. That's our signal that the VAR shock isn't over and it's time to go to cash and protect capital.
So, here's our final checklist for the session. The bull case is confirmed as long as NASDAQ holds above 25,850. The bear case, the bull trap, gets triggered if we see 10-year yields spike back over 4.3% or if the VIX pops above 18. That would tell us the US is decoupling from the Asian signal. And on our watch list, of course, is Nvidia to confirm that HBM signal, along with our other key proxies Palantir and CrowdStrike. So that's the briefing. The key supply chain nodes in Asia have sent a clear, unambiguous, all-clear signal. The technical, algorithmic storm looks like it has passed, and the fundamental demand for AI hardware is accelerating. The final question is, will the US markets confirm the signal tonight? Stay sharp.